Hi everyone. Today I'll be talking about how to invest in the S&P 500 ETFs as a Canadian. There are many options that deal with foreign exchange and withholding taxes that Canadians need to consider before jumping in. This is a continuation from a previous video I released called What Are ETFs? A Beginner's Guide. If you're new to ETFs, if you're new to investing, please go back, watch that video before jumping into this one. As always, please give the video a thumbs up and subscribe to the channel. Remember to turn on the notification bell so you get a heads up every time I release a video. A quick intro to the S&P 500. It is an index fund of the largest companies in the United States. It has done historically really well in terms of capital appreciation and dividends. The issue is, if you're not in the US, you have to invest in US dollars. So you have to convert, adding a currency risk, which you may or may not be willing to take. Also withholding taxes on your dividends, which will definitely hurt your rate of return, especially if you're investing in a tax-free or tax-deferred vehicle like the TFSA, RRSP, or RESP. I'll be breaking down a few different scenarios and the alternatives for each account. I'll say there are 3 good US ETFs on the New York Stock Exchange that track the S&P 500. VOO, IVV, and SPY. These are all in US dollars. My personal favorite is VOO, just for the low management expense ratio in comparison to the others I just mentioned. Now for Canadians, there are 4 good ETFs that do the same thing with the S&P 500. VFV, VSP, XSP, ZSP. These are all in Canadian dollars. This is where it gets complicated. Which one do I choose? Which currency do I purchase it in? And which account do I purchase it in? VSP and XSP are both currency hedged. This means they have systems in place so your investment doesn't get affected by changes in the US dollar or Canadian dollar. Your investment only depends on the investment of the fund, which is the S&P 500. This is good because many people don't want to be exposed to another risk, which is currency risk. This means if the US dollar tanks 30%, you should be safe because you're hedged against that risk. It also means if the US dollar shoots up 30%, you're willing to accept that you're missing out on that potential gain. These two ETFs are fairly similar, but if I were to choose one, if I were to choose a hedged ETF, I would go with VSP, mainly due to the lower management expense ratio. So going forward, if I was to talk about or refer to a hedged currency ETF, I'll only be referring to the VSP. The other two I mentioned, VFV and ZSP. These are both similar, they're both non-hedged, so you're at risk of both the ETF and currency. So the ETF could go up, the currency could go down, wiping out your gains. On the flip side, if the ETF goes down, you might get an increase in the currency, kind of eliminating your losses. You can get a double down where the ETF goes down, currency goes down, doubling your losses. You could get a double gain where the currency increases and the ETF increases. Looking at both these ETFs, if we hold on for years and years or decades, if not longer, the management expense ratio plays a bigger and bigger factor. So looking at both these two, if I were to choose a non-hedged ETF, I would go with VFV. So out of the 4, not taking anything else into account, if I were to choose one right now, my personal favorite, my personal opinion is VSP. I would say because it's currency hedged and the low management expense ratio, you don't have to worry about the fluctuations in the US or Canadian dollar. You only have to worry about the S&P 500. You only have one thing to track, one thing to worry about. Here's where we get more confusing: withholding taxes. Dividends you receive on US ETFs are usually subject to a 15% withholding tax unless you hold them in the correct account. Thankfully, Canada and the US have some tax treaties in place so you don't get double taxed, where Canadians get some relief on US investments. What does this mean for you? If you have a US ETF that pays dividends and you purchased it in your RRSP or RRIF, you do not have the 15% withholding tax. In the treaty, it specifically outlines these registered accounts do not have the withholding tax. It's a little benefit that Canadians get. Here's another thing to keep in mind. Notice I only mentioned RSP and RIF. I did not mention RESP or TFSA. These are not included in the treaty. These don't have a tax savings or tax haven. If you hold a US ETF that pays dividends in these two vehicles, you will get taxed. This is very important to keep in mind because investing in a TFSA, and if you have a US stock that has withholding tax, this eliminates the whole purpose of the tax-free portion of that savings account. Here's where it gets even more confusing. If you hold one of the 4 Canadian listed ETFs I mentioned in any of these accounts, TFSA, RESP, RSP, RIF, there is no tax treaty in place because they're Canadian listed. There is no tax savings, no tax haven. There is withholding tax. You will get taxed. I'll try to break it down as simply as I can. If you're investing in your RRSP right now, I would recommend VOO, VOO. This means you have no withholding tax, but you also have to buy in US dollars. I would not purchase one of the Canadian ETFs in an RRSP due to the taxes that would be charged and lost forever. If you're currently investing in a TFSA or RESP, I would recommend the Canadian listed ETF VSP. This is because it's currency hedged, low management expense ratio, and it's purchased in Canadian dollars, so no need to convert anything. Again, I'm trying to keep this video as basic as possible. This video is meant for beginners just trying to get into the market. We can go even deeper. We can get even more complicated. Like, what if I already have a lot of US dollars with no need to convert? What should I do? What if I have access to cheap US dollars without high conversion fees? Should I buy VOO? Should I convert back to Canadian for one of the ETFs? I'm just trying to keep this basic. I'll save more advanced topics for another video in the future. I hope it's all clear. That's all for this video. Please let me know if you have any questions. As always, please check out my past videos on intro to ETFs and intro to investing for beginners. And check out my upcoming videos where I talk about REITs, not REITs, the real estate investment trust that people are so gung-ho about, even myself. So that's all for now.